Good morning, students. Myself, Dr. Manju Bhargavi, Assistant Professor in Commerce, JFGC, Madhugiri. Today, I will be dealing with the problem on redemption of preference shares at premium, part of fresh issue and journal, and remaining out of divisible profits. And I will be explaining the journal entries and also the balance sheet after the redemption. Course BCom, subject commerce, paper, corporate accounting 1. The areas I would be covering in this topic would be introduction, meaning of preference shares, problems on redemption of preference shares at premium, premium out of partly out of fresh issue and the remaining out of divisible profit, journal entries and balance sheet after the redemption. I'll have an introduction part. Preference shares are shares which are preferred over common or equity shares in payment of surplus. Owners of preference shares get fixed dividend. However, in the event of liquidation of the company, they are paid after bondholders and creditors, but before equity shareholders. Redemptions of preference shares. The preferences may be made with at par or at premium, but not at discount. Premium on redemption of shares, if any, must be provided for out of divisible profits and securities premium. Redemption of preference shares must not be considered as reduction in the authorized capital of the money. The same thing can be explained with an illustration. Let's have the balance sheet in front of us. Can have a look at liabilities we have and assets are there. In the liabilities, we have 10,000 equity shares at the rate of 100 each fully paid. And then you also have 20,000 preference shares, 2 lakh, 10 lakh, and then you have another 10,000, 12% debenture holders also we have at the rate of 100 each. That would be consisting 10 lakhs, and general reserve 50,000, profit and loss account 25,000, sundry creditors 7 lakh 65,000. And coming to sundry assets, we have 30 lakhs, and then cash at bank would be 50,000. Total balance sheet would be 3 lakh 50,000. This is the balance sheet of a company. The first one, 10,000 equity shares of 100 is fully paid would be 10 lakhs. Now we'll see the company decides to redeem the preference shares, and for this purpose made a fresh issue of it is going to issue freshly equity shares at the rate of 10 to the extent of 1,25,000 rupees. All the shares were duly taken up and paid for by the existing shareholders. All the shareholders have been paid off. And then we have to write journal entries and prepare the balance sheet after reduction. So first we must pass certain journal entries to record this. The first entry would be the amount due to preference shareholders. Preference capital account data 2 lakhs, and redemption of preference shares 10,000. 2 lakh we have seen in the balance sheet we have 20,000, 10% preference shares of 10 each, 2 lakh, and the premium here they say 10% premium. Premium would be amount 10,000, and the preference shareholders we are going to credit with 2 lakh 10,000. And the second would be the divisible profit. It will be transferred to capital redemption reserve. So we have revenue reserve 50,000, profit and loss account 50,000. We can see in the balance sheet revenue reserve 50,000 and profit and loss account 25,000. So the total 75,000 would be transferred to capital redemption account. And the next entry would be for premium on redemption of preference shares will be transferred to share premium account. For that, the journal entry would be securities premium account data to premium on redemption of preference shares. That is 10,000. 10,000. Here they are going to redeem at a rate of 5%. So we will get 10,000 is the premium. And then for issuing new issues, the company is going to issue new shares to the extent of 1,25,000. So we'll see the journal entry for that. The journal entry would be Bank, we debit bank because the money is going to come. Bank account data to equity share capital account. How many shares they're issuing? 12,500 at the rate of 10. So we need total 1,25,000. 1,25,000 is the capital required. And finally, the preference share capital account data to bank account for the final payment. Payment would be for the preference shareholders, and we are going to credit the bank because the money would be going to the extent of 2 lakh 10. Now we'll have a look into the balance sheet after the redemption. We have a share capital authorized and then called up and paid up would be, we have called 10,000, 10 lakhs equity shares 100 each, which was there earlier 10 lakh, and we have freshly issued 12,500 equity shares at the rate of 1,25,000. And the capital redemption reserve total what we have transferred 75, that is here 25 plus 50,000, total 75,000, and 10,000 debentures of 100 each, 10 lakh, that will stay as it is, and the sundry credit existing earlier this coming because we had made no changes for those things. So then we'll have a, asset side. You have sundry assets. We had asset like 30 lakhs and then 50,000 cash. This 50,000 cash and also some of the asset value has been used to repay the security preference shareholders to the extent of 2 lakh 10,000, and the balance in sundry asset would be 29 lakh 65,000. So, well, that's all, students. I hope you understood the problem. I request all of you to write and solve this problem once again. Thank you so much for your cooperation, and we'll see you in the next class.